Hi, this is Clayton Ream with Van Ahn Company with your afternoon grain and livestock closing comments for January 28th. Well, I guess the key phrase today was let the games begin, as we had the cancellation of soybean sales to China, which led to the pressure in the grain markets, and it's leaked over into the corn and the wheat markets as well. So key support was breached in the soybean and wheat markets, but held in pretty strong for the corn market. So we are starting to see some end user pricing as these markets break down a little bit and remain in the sideways pattern that we've had for quite some time. Looking back at the soybean market, we've been in a $9.860 trading range all the way back to August 28th. So it's a real tight pattern. Not a lot of news to shake the market one way or the other, but we do have South America harvest that will start to pick up, but there's quite a bit of moisture in those areas that are going to create potentially some logistic problems, and then a little bit of drying in Argentina. So export sales tomorrow morning is going to be the key focus first off, with them being delayed as a result of the recent winter storms. So if the bulls are going to keep things interesting here, we need to see some solid numbers, but with that cancellation this morning in soybeans, that led to the pressure. Over in the livestock markets, not a lot of action, I guess, to speak on as far as cash or market movement, but a little softer undertone to the futures after a little firmer start to the morning. So the hog numbers continue to run about as expected, but we've had that strong run in cash and strong run in futures, so a little bit of profit taking isn't out of the question. But if those numbers start to expand, then we could be in for a little bit of more correction to the downside. Cattle inventory report tomorrow at 2 o'clock. We're going to pay attention to the cow numbers on hand and also the amount of calves to see if this expansion is as big as we've all kind of been talking about here for the last few months or not, to justify you know, the sharp sell-off from the past highs that we had here about a year and a half ago. So that's the livestock markets and the grains. Over in the outside markets, you had Saudi Arabia. We had an OPEC meeting, I guess, to sum it all up here, but a lot of expectations that there were reports that there was going to be a 5% production cut throughout the world. That's not necessarily confirmed, but there is talk that those numbers are legit exercise to be discussed in future results, I guess would be the best way to put it. So as long as that stuff's around, we're expecting the energy markets that typically find their bottom in January to potentially have their bottom, and it'll be that much more interesting if they do start to come together as a world as far as the OPEC members come to start to cut production to help support these prices and kind of ease the pain that we've been seeing in these oil producing countries. Stock market a little bit higher, dollars fading as a result of yesterday's FOMC meeting as well. So if we can get that dollar to kind of break additional support that we were breaking today, that should help commodities as a whole moving forward. So as always, trading in futures and options provides risk and loss, is not suitable for all producers.